What are commercial papers and what are corporate bonds? Have you heard of them before? A lot of times in the marketplace, or what's quite popular is most people talk about treasury bills, most people talk about mutual funds. Those are the very popular investment options. But now that we're seeing a drop in rates from treasury bills, which will also affect mutual funds, because remember, mutual funds are really aggregated funds that trade in the money market or capital market. Now that we're seeing a drop in funds, maybe it's time to begin to consider other options that may be available in the marketplace, right? And a very good example is a commercial paper or a corporate bond. Let's start with the definition first, and let's see how they're different. So what is a commercial paper? A commercial paper is issued by a corporate organization looking to raise short-term funds, right? Keynote, short-term funds. While a corporate bond is also issued by a corporate organization, right? Usually a top-tier corporate organization who is well established in the marketplace, that existed for a long time, can meet their debt obligations, have good credit ratings, and they issue these instruments long-term. So the corporate bond is more long-term in nature, while the commercial paper is quite short-term in nature. Speaking of how long they last in terms of the tenor, a commercial paper is usually for a period of a minimum of 7 days, up to 365 days. That's the maximum period you ever find an issued commercial paper for. While a corporate bond can be from a minimum of 1 year to as long as 10 years. Remember, it's long-term, all right? And then the next thing is, what are commercial papers raised for? What do companies raise commercial paper for? Remember, commercial paper is a form of debt instrument. Commercial papers are usually raised for working capital expenses. The company just has a short-term expense they want to meet and decide to come and raise debt in the marketplace, something they can pay off over time, all right, in a short period of time. While corporate bonds are more for capital outlays or infrastructural needs. That's why it is long-term in nature, because the company probably wants to raise funds for something quite long-term and more requires maybe more capital that they want to pay off over a longer period of time, right? So if the company decides that I don't want to raise short-term, I want to do something more long-term, they will do a corporate bond instead of a commercial paper. Now, because commercial papers are issued by corporate organizations, what are the returns on them? So remember that with the typical treasury bills, they're issued by the government. So they're quite risk-free, which means that there's hardly any risk with that investment option. But with a corporate organization, there is some risk associated with that debt instrument. And that's because it depends on the credit rating of that particular organization. How well have they met their needs in the past, right? Are they a top-tier company? How big is that organization? Is it a multinational? Is it a local organization, right? Those are the things that go into deciding, what's the additional risk premium on the risk-free rate. So let's say the risk-free rate is 10%. The risk-free rate is usually the rate on the T-bills, risk-free rate. There will be an additional risk premium on that rate because of the additional risk that comes with lending to a corporate organization, okay? So sometimes plus or minus 6-7%, depending, I will get up to 8% sometimes, or 9 or 10, depending on the risk rating or credit rating of that organization, right? So you get higher returns on commercial papers than you get on traditional treasury bills or some mutual funds, depending on what that mutual fund trades in. Corporate bonds, because they are long-term, might be a bit average, right? But maybe plus or minus a bit higher than the regular federal government bonds as well. Okay, so ROI is usually slightly different and slightly higher for these two bonds because they are issued by, for these two instruments. Remember, one is a paper and one is a bond. Bonds are usually longer. So ROI is usually longer for these instruments because they are issued by corporate organizations. So who issues these instruments, right? Commercial papers are issued in the money market. Remember, the money market, if you watched any of my former videos, the money market is where you trade short-term instruments. Instruments that are less than 1 year, less than 365 days. Whereas corporate bonds are traded in the capital markets, right? Because that's where you trade long-term instruments. So the commercial paper is traded in the money market because the money market is a market where you trade short-term instruments, while the corporate bond is traded in the capital market because that's where you trade long-term instruments. So how can you invest in any of these debt instruments? Well, speak to your financial institution. Find out what is the minimum required for to invest in a commercial paper? What is the minimum required to invest in a corporate bond? Usually it's higher, especially now that we have a lot of restrictions from the regulatory authority in terms of the OMO auctions and in terms of some people, rather the CBN saying individuals cannot invest in treasury bills again. You might have to look for organizations that aggregate these funds and invest on your behalf. All right. So call your financial institution and find out, can I invest in a commercial paper? What's the minimum required to invest in this commercial paper? Can I invest in a corporate bond as well? If I want to do something long term that is quite safe, not as risky as the options you might see, other options in the marketplace. All right. Reach out to your financial advisor or your financial institution and find out. There is no excuse to be ignorant about your investment options, all right? And you don't have to stick to the regular traditional options all the time. Try something new in 2020, all right? I'll see you next week. If you have any question or if there's any instruments you do not know or are not very clear about, drop a question in the comment box and I'll get to it. Bye for now.